Right now, every single advanced AI chip in the world cannot exist without one company's machines. That company is ASML. It is sitting at a make-or-break technical level with 38.8 billion euros in backlog, record bookings, and Q1 earnings just weeks away. I have done the full Lepus Research swing analysis, every level, every catalyst, and the exact trade setup, and that is what we are covering today. Before anything else, the Halal check. ASML is a semiconductor equipment manufacturer. No alcohol, no gambling, no weapons, no haram segments of any kind. Debt is well within acceptable thresholds, and revenue is 100% from equipment manufacturing and service contracts. Based on Musaffa and Zoya screening, ASML passes as Halal compliant. Clean business, clean balance sheet. Let us dig in. So what does ASML actually do? They manufacture extreme ultraviolet lithography machines, EUV for short. These are the only machines in the world capable of printing chip circuits at 7 nanometers and below. Without EUV, there are no advanced chips. Full stop. TSMC, Samsung, Intel, they all buy exclusively from ASML. There is literally zero competition in EUV. Each machine costs between $200 and $400 million, and they sell dozens every single quarter. Here is why we are talking about ASML right now. The stock has pulled back 8%, from around $1,470 down to $1,351. It is sitting right on the 50-day exponential moving average. The stochastic is hitting oversold at 27.84. Bollinger Band %B is at 0.20, meaning price is in the bottom 20% of its normal trading range. And on top of that, Q1 earnings are expected around April 16th, just outside our swing window, which means the pre-earnings institutional positioning bid is about to kick in. That combination is what makes this setup worth watching closely. Now the technicals in detail. Price is at 1,351, down 2.53% on the analysis date. The 52-week range runs from 572 on the low end to 1,547 on the high. This stock more than doubled in the past year. The primary 6-month trend remains bullish, but we are in a short-term corrective pullback from the January highs. On moving averages, price is right on the EMA 50 at 1,342, and it is sitting below the EMA 9, EMA 21, and SMA 20. A bearish short-term alignment. But here's the important context. Price is still 25% above the 200-day EMA at 1,076. The long-term uptrend is completely intact. RSI is at 45.53. Neutral territory, not oversold yet. The MACD line is at -3.89 with the histogram at -15 and still expanding. That active bearish crossover is the caution flag, and it is exactly why we are not just blindly buying the dip. The stochastic tells a different story though. %K at 27.84, below %D at 36, approaching oversold. When %K crosses back above %D from below 30, that is the early reversal signal to watch for. Bollinger %B at 0.20 is approaching the lower band at 1304. Classic mean reversion setup territory. Technical rating overall, 5.5 out of 10. Mixed short-term, but the longer structure is solid. Quick note, if this kind of deep analysis is useful to you, hit the like button right now. It is free, takes 1 second, and it tells the algorithm to show this to more investors who need it. Now the fundamentals, and these are genuinely elite. Q4 2005 revenue came in at 9.7 billion euros, a quarterly record. Full year 2005 hit 32.7 billion, up 16% year over year, with 2006 guidance set at 34 to 39 billion. Gross margin was 52.8% for the full year. Software-like margins on machines that cost hundreds of millions each, which tells you everything about the pricing power this monopoly has. The backlog stands at 38.8 billion euros, more than a full year of revenue already booked. Q4 bookings came in at 13.2 billion versus a 6.32 billion consensus estimate. That is more than double what analysts expected. Analyst consensus on tip ranks: 12 buy ratings, 0 hold, 0 sell. Average price target of $1,625. Short interest is only 0.35% of the float. Nobody is actively betting against this company. Fundamental rating, 9 out of 10. Now the trade setup. This is a mean reversion play into the pre-earnings run. Entry zone is 1,320 to 1,345, the EMA 50 area. The trigger I need to see is the stochastic %K crossing above %D from below 30, combined with a green daily close above 1360. If the stock dips further, there is a secondary entry zone at 1,300 to 1,310, near the Bollinger lower band. Stop loss is at $1,260. Below the Bollinger lower band -1 ATR buffer of $54. That puts the distance from entry at $75, or 5.6%. For position sizing, if you are risking 1.5% of a $100,000 account, that is $1,500 at risk. Divide by 75 and you get 20 shares. For targets, Target 1 is 1,420, the EMA21 and SMA2 cluster. Take a third of the position off there and move the stop to break even. Target 2 is 1,475, the analyst consensus zone and where pre-earnings institutional buying tends to concentrate. Take another third off. Target 3 is 1,540, near the 52-week high where you trail the remainder with a 1 ATR trailing stop. Risk-reward from the entry, $75 risk for 85, 140 and 205 in reward. Ratios of 1.1, 1.9, and 2.7. That is a favorable setup. One critical thing before we close. Q1 earnings are expected around April 16th, and our swing window ends April 12th. You need to exit all positions by April 10th to 12th at the latest. Do not hold through earnings. This is a pre-earnings swing, not an earnings play. If price closes below 1260, or the VIX spikes back above 35, or there is any major ASML-specific negative news like an export ban expansion, exit immediately. Download the full Lepus Research ASML report, every trade setup, the full execution checklist, and every chart level from the link in the description. Subscribe to Investor Bunny for weekly halal stock analysis and swing trade setups. Like, share, and see you in the next one. This content is for educational and informational purposes only. It is not financial advice. Always do your own research and consult a qualified financial advisor before making any investment decisions. Halal compliance status is based on available screening data and may change. Verify independently.